Committee, welcome, and we will jump into our topic. Today we'll be talking about the topic of the pharmaceutical cost and supply chain, and that will be what we spend today on. We'll get into a few items with the Senate as we get to next week. That agenda is out, but rather than belabor what else is happening, I asked if our Vice Chair would just set us up a little bit for what we would talk about today.
Thank you, Mr. Chair and committee. So as we started this process, as we were going down, as we started the session, one of the questions that came up, we're talking about drug prices and how that all went, and I had no idea what we were talking about. So as I started doing some more study and some more research, I realized how little I knew, and I know some of you have been on the board before, or committee before, and you understand a lot. So I apologize if at the end of the day you go, wow, that was very simple, and we already knew all that. But what I did is I went out with the chairman's permission, and again, thank you, sir. I went out and asked for the experts to come in and lay out for us the supply chain, not focusing on any one thing, but who are all the key players in here? What is their role? What is the communication structure between all of them? What is the product flow from the very beginning of the supplier all the way to the consumer at the end? Talking about the cash flow as it relates and the contracts that may not be in there. One of the things I did notice as I went along was the last administration at the national level had signed some bills or signed some laws that talked about gag orders, removing of those, and then also we started seeing where pharmacies could start talking to customers about the different prices that were around. There are many things that are in this communication flow that I hope that today we'll be able to identify, again, the things about with the supply chain, how that works, the communications chain, the contracting chain, and all those things. So with that, Mr. Chairman, that is the concept and what we ask for the individuals that are behind us. And thank you, sir, for setting this up, and I appreciate that.
So thanks for the overview, and thanks for your work to get it together. And then we appreciate everyone else who's here. So to jump straight in, we'll start off with Mr. Brad Smoot, and we'll start talking about where things go.
We on? Okay. Chris was so naturally loud that I thought it was on already, so I apologize. In any event, we have assembled some folks that we hope will help you as you analyze this very complex and enormously important aspect of healthcare. We have Melody Schrader, State Affairs with the Pharmaceutical Care Management Association, otherwise known as Pcma, Alex Sommer with Government Affairs with Prime Therapeutics, PBM, and Jay Weaver, Vice Chief Pharmacy Officer for Blue Cross Blue Shield of Kansas City. We also invited, and they are online as well on the WebEx, some other folks that can help answer questions. They won't necessarily be offering to speak until you get to that segment of the presentations. But we have Marissa Schaeffler with OptumRx, which is a United affiliate. Sergio Santiago doing the drug policy and federal programs for America's Health Insurance Plans, otherwise known as AHIP. Candace Chennai with the State Relations for Cigna, and Regina Stivers, the Director for State Affairs with Pcma as well. Mr. Chairman, I only have one last thing really to offer you all, and that is that as I look at all this, it may be a good place to start out with something really simple, because it's easy to get into the weeds, it's easy to talk about a lot of different aspects here, and I hope you'll get a chance to do this. I think you're very wise to start building the background before things get too far down the road. I prepared a little chart that should be attached in your materials. It looks like this. I just call it the arrow chart. On the left side of the chart are the sellers, and on the right side of the chart are the buyers of pharmaceutical products. As you all know, when you have commerce, you have sellers and you have buyers, and they have opposite motivations. The seller's motivation is to make more money, as much money as they possibly can, and the buyer's motivation is to pay as little money as they possibly can. And so that's where the two worlds collide, and that's what a lot of this discussion is really about. You'll see in the seller's chain, the chain of supply of the pharmaceutical products, the material suppliers, the manufacturers, the wholesalers, the PSAOs, and the retail pharmacies. That's the red arrow on the left. On the right side, you see all those other people that end up being the buyers. Those are the private employers. Most people get their insurance through private employers. We have self-insureds and fully insureds. We have public employers. A good part of Blue Cross Blue Shield of Kansas business are cities, counties, school districts whose employees are paid for by taxpayers, just like the state of Kansas. We have labor unions. We have Medicare and Medicaid, two of the largest suppliers of health care, including pharmaceutical products, Veterans Administration, and insured individuals who may buy their products off the exchange or on the exchange. And finally, you have uninsured individuals who buy out of pocket, buy their pharmaceutical products out of pocket. All of these buyers, hundreds of thousands of Kansans who buy these, use PBMs except for the uninsured. Everybody else uses a PBM of some kind to help negotiate rates, handle the mechanics of the delivery of pharmaceutical products to ultimately the patient who shows up at the window of the pharmacy. So with that in mind, I trust that you will all, as you always do, take into consideration the taxpayers and the employers and the individual patients as you examine this entire process. The patients and the employers are our customers at Blue Cross Blue Shield, as they are for the other insurers and for the employers that are self-insured. With that, Mr. Chairman, I'll be available throughout, but I don't want to take any more time and leave it for our guests.
Thank you, and thanks for your work to bring in some other folks. Our next conferee would be Melody Schrader, and if you're online, and you can jump right in.
I am online. Can you hear me?
Yes, we can. Thank you.
Excellent. I have a slide deck that was to be available. Are those slides available?
They are.
Yes.
We have them on the computers. Will you be showing them on the screen as well for our technology person? Do any in the committee not have the slides either printed out or on their computer screen?
Do you want me to do the presentation without them, or do you want me to share my screen, or do you just want me, how do you want me to proceed, Mr. Chairman?
I would say either way would work well, your discretion.
Let's see. I think I can share my screen if you'd like.
Let's give that a try. That sounds great.
I'm always hesitant, but let's see. I tell you what, Mr. Chairman, since you have the slides available, I'm going to just go through the presentation. I'm afraid if I try it, that, let's see what happens. Yeah, I can't, I'm afraid I can't.
Thank you for trying.
You're certainly welcome. I see on my screen that I'm viewing Gary's screen. Are you also seeing that? Is Gary trying to show the slides?
Yeah, I'm working on it.
Okay. I applaud your effort, Gary, because I'm afraid if I try it on my end, there's no telling what will happen. You let me know what you want me to do. Well, not to put too much stress on Gary. If he gets it up, I'll catch up, but I'm going to go ahead and start, Mr. Chairman.
Thank you.
You're welcome. So good afternoon. My name is Melody Schrader. As Brad said, I am joined by my colleague Regina Stivers, and we represent the Pharmaceutical Care Management Association. Pcma is the national association representing America's pharmacy benefit managers, or PBMs, which administer the prescription drug plans for more than 270 million Americans, with health coverage provided by, as Brad said, employers, health insurance plans, labor unions, state and federal employee benefit plans, Medicaid, Medicare, etc. So today, the industry has a 40-plus year track record of clinical and cost management innovation. Initially, PBMs primarily processed claims, but as drugs became more complex, expensive, and an integral part of our healthcare delivery system, our clients asked, and now they demand, tools that manage that part of the health benefit. PBMs aggregate the buying power of our clients, and we negotiate discounts from manufacturers of drugs that compete with therapeutically similar brands and generics. These price concessions, in the form of rebates, negotiated by PBMs on behalf of plan sponsors, significantly lower the cost of drugs. As a result of the PBM's role in negotiating discounts from manufacturers, PBMs have been able to keep drug costs down, and the growth of net prices for prescription drugs continue to fall. PBMs exist to meet the specific needs of our clients who pay for the drug benefit. So who are our clients? Private sector employers, as Brad mentioned, public sector employers, commercial health plans, union plans. Whether it's a large employer negotiating for these services or a regulated health plan, they are making decisions based on a finite amount of money. The employer wants to provide the benefit package that best suits his employees or her employees and allows him or her to retain a productive workforce while still preserving the capital needed to operate his business. The health plan must be able to balance the cost of the benefit with the amount of the premium that must be charged. So how are prescription drugs paid for? Well, 40% of the drug benefit is paid for by an employer-sponsored health plan. And over 20 million scripts in Kansas are paid for by commercial health plans. Today, pharmacy benefits account for about 23% of the premium dollar for prescription drugs. That's a vast difference from when I started working in healthcare many, many years ago. With approximately 66 different PBMs in the marketplace, the PBM industry is highly competitive. Plan sponsors have a variety of choices when considering how to best manage their pharmacy benefit. PBMs offer a wide array of services that provide proven tools because our clients have demanded them. These tools are widely recognized as key drivers in lowering prescription drug cost, increasing access, and improving outcomes. PBMs lower costs for patients and payers. According to researchers, PBMs help patients and payers save $941 per enrollee per year in prescription drug cost. Plan sponsors use these savings to benefit patients by lowering premiums or deductibles. I see you've got your slides up. If I've already gotten past that, if you want to kind of go forward, let's see, go a little bit further. Yeah, we're about right there actually. So let's see. Yeah, so about right there. So we're talking about the RFP process here. And I think this is really an important part of what we're talking about. And I'm going to go back to my prepared remarks, but I want to get into this particular slide. Can you go back one slide? Because I want to make sure that I've covered everything for you. Yeah, right there. So I'm going to start right there for you. So PBMs are a B2B vendor, and we have a business-to-business relationship with the entity that's offering the coverage. 93% of employees are satisfied with their PBM. According to the 2020 Large Employers Healthcare Strategy and Plan Design Survey by the nonprofit National Business Group Health, total costs for healthcare, including premiums and out-of-pocket costs for employees and dependents, they'll rise about 6% to about $15,375 per employee in 2020. They believe if they adopt additional cost management initiatives, such as alternative network models or regenerating contracts, they can keep those cost increase down to about 5%. Now, that's what's scary about that, is that small employers pay between 8 and 18% more for the same coverage, according to the National Conference for State Legislators. So if you can go to the next slide for me. Thanks. Okay, great. So now we're to the RFP process that I said. So I'd like to pause for just a minute and talk about that. Because like I said, we're a B2B vendor. But the relationship between the PBM and the client is an important public policy decision because it often gets lost in this conversation. Whether it's a large self-insured employer or a health plan or a labor union, they are the ones designing the benefit. They determine how it will be administered. Every detail is outlined in a contract between those two sophisticated entities. These services are procured in a complex and competitive RFP process that's outlined here. So if you'll go to the next slide, please. So PBMs have developed a number of tools, and we make those tools available to our clients. The clients evaluate the various options, and they structure their drug benefits to ensure appropriate use of resources. PBMs reduce drug costs by encouraging the use of generics and affordable brand medications. We offer programs that reduce waste and increase drug therapy adherence, that improve health outcomes through plan design, clinical management, step therapy, drug formularies. But we work with our clients to ensure that their members, their employees, have access to the necessary medications through a variety of high-quality pharmacies, including retail, community, mail order, and specialty pharmacies. We manage high-cost specialty medications. We negotiate rebates from drug manufacturers and discounts for drugstores. PBMs contract with over 65,000 network pharmacies to ensure patient access to prescription drugs. We monitor drug safety, and we alert pharmacists to potential drug-to-drug interactions. PBMs provide highly efficient mail service that offers safe and effective home delivery of medications. That's been really important during COVID. But the plan sponsor always has the final say when creating the drug benefit. And what's really important is, remember, the plan sponsor often is the employer. And who knows better what's important for their beneficiaries than the person that is the employer of their employees, right? So if you could go to the next slide, please. So more than 270 million Americans rely on PBMs to provide their pharmacy benefit. 20 million pharmacy claims were filled by commercial health plans last year in Kansas, most without a single hiccup. Consumers need reliable, affordable access. Employers and health plans rely on PBMs, not because they're mandated to, but because we save them money. PBMs are the only entity in the drug supply chain whose sole purpose is to save our clients money. There are additional slides in the slide deck, but I'm going to save those for another day. I know we're short on time, and I want to be sure to be able to answer questions. So I appreciate the opportunity to be here. We'll be here along with Regina to answer questions as you have them. Thank you so much for the opportunity to present today.
Thank you for sharing with us, and we'll look forward to looping back with you with questions. Next, we have Alex Sommer. You would join us on the video.
Hey, can you guys hear me okay?
We can.
All right, thank you. Thank you, Mr. Chairman and members of the committee. Thank you for pulling this conversation together. I really appreciate the opportunity to appear before you virtually and have this discussion about the way the prescription drug supply chain works. I think that it's really an important conversation, and I'm glad that, before getting into the specifics of any bill, that we're really having this, this high-level discussion of how things actually work, and diving into the way, prescription drugs are paid for in Kansas. So with that, building off of what Melody Schrader said, I guess first I should probably introduce myself. I'm Alex Sommer, and I represent Prime Therapeutics, which is a pharmacy benefit manager based in Minnesota. We work with and are owned by Blue Cross, nonprofit Blue Cross and Blue Shield plans across the country, and that includes Blue Cross and Blue Shield of Kansas. So with that, and now that I've told you who I actually am, go to the next slide. So what I want to talk about here is, what does the prescription drug market actually look like? At the outset of this meeting, it was mentioned, trying to understand what that chain looks like from manufacturer all the way to the consumer, and kind of what the different contractual relationships in there, the different drivers. And this is what that's really trying to get at, is who are the players in this space? Go back one slide. Let's stay. And so here, as Melody mentioned, PBMs contract with payers, but we also contract with brand name drug companies, and then pharmacies and pharmacy service administrative organizations. What we do here is, this chart kind of outlines, is our contractual relationship with the payer. That was what Melody talked about. We work for those payers who choose to hire us. And with that, it is our job to make sure that we are good stewards of those healthcare dollars, make sure they're getting the best possible value for their prescription drug spend. So what we do as a PBM, the value that we can really drive is in leveraging our combined purchasing power of all of our clients. So it's not just the health plan. So let's say, Blue Cross Kansas, since we are there, is if they were buying on their own, they'd have only their book of business, only the Blue Cross Blue Shield of Kansas members to leverage in their negotiations. What we bring to the table is the combined book of business of all of the clients that we work contract with, to negotiate savings from drug companies and pharmacies. So with that contract payer there, then we contract out with brand name drug companies, pharmacies, as I mentioned, and then PSAOs. So who those are? Drug companies or brand name drug companies, those are going to be the manufacturers of those patented drugs for which there are not generics on the market. And what we do there is we can drive savings through the use of things like rebates to lower the net cost of those drugs for our members. Through our contracts with PSAOs and pharmacies, what we do is we try to drive savings on that side as well by getting the best possible value, again, for that healthcare dollar on that side of the equation. So that's going to be establishing a network of pharmacies that, again, is providing the best value services or high quality, valuable services that ensures sufficient access to a network of pharmacies for our Blue Cross and Blue Shield members. And with that, the pharmacies, each of those relationships each spot, that each contract there within that kind of chart, market competition is ultimately what drives the lower costs in each space there. With brand name drug companies, we negotiate where there are therapeutically interchangeable or therapeutically equivalent drugs. We can negotiate with those brand drugs to find preferred products and negotiate the net cost of those drugs down. With pharmacies, we ask them to compete on quality and price to be part of our networks. And some of those negotiations are going to be with PSAOs, or many of those will be. And so with that, go to the next slide, please. How that, I think what I want to get into here is what our contract with the pharmacies looks like. So when the pharmacy dispenses the drug to a member to a patient at the counter, what is that transaction? What does the contract look like to be paid for that drug? So as I mentioned, the payer contracts with us, and the reimbursement is based on, or we'll back up, the reimbursement is based on the drug cost plus the dispensing fee minus the patient cost share. So when we contract with the actual pharmacies aren't always, it's kind of a misnomer to say contracting with pharmacies, because often who you're contracting with is PSAOs. So I guess let's back up again, sorry. There are two spots. There's the big chain pharmacies who we contract with directly to be part of the network. And then in the independent pharmacy space, we contract with either the PSAO or the independent pharmacy directly. A PSAO has a number of pharmacies underneath their umbrella, much like a PBM, that essentially they leverage the combined power of the number of those pharmacies to have greater leverage in those negotiations with us. So it's not necessarily us contracting directly with independent pharmacies, though that may be the case sometimes, but often, again, it's through that PSAO. And these PSAOs are often owned by drug wholesalers as well, who are the ones who are making and selling those, or are selling those generic drugs. And those are, again, very large companies. And I think it's worth noting here that the 4 largest PSAOs are owned by the largest wholesalers of drugs as well. So as I noted, over 80% of independent pharmacies delegate their contracting to PSAOs. So I think that's where, often the discussion is around this kind of David versus Goliath in the contracting discussions with PBMs and pharmacies. That's not really the case. These PSAOs are, as I mentioned, very large organizations that have very significant leverage when it comes to these negotiations. In fact, the biggest PSAO, I think it's McKesson, but don't quote me on that, who has more pharmacies under their umbrella than Walmart. See, that's kind of the scale we're talking about as far as what they're bringing to the table in these negotiations. And so they kind of aggregate that pharmacy buying power to, again, negotiate with us for those contracts. Now, as I mentioned, any pharmacy can contract directly with PBMs, and the chain pharmacies often do, or generally do. But again, when it comes to independent space, most of that contracting is done through the PSAO. So it's two large sophisticated organizations negotiating with each other to, again, be part, and those negotiations are going to include, are really about being part of that network of pharmacies that we put our plans members to. If we go to the next slide. So here, we talked about how contracting works with PBMs and pharmacies and PSAOs. Now, what we're paying for on that there is the actual prescription drugs. Now, what is the actual payment for that? And I think often you would think price, cost, same exact thing, right? In this space, I think it's worth distinguishing between those two words because of the way drug pricing and reimbursement works. Drug companies, so I mentioned like brand name drug companies or manufacturers of generic drugs, they set drug prices. They control it in the brand space. That is, they have the patent on it, so they have complete control over what the price of their product is. Now, what we do is that we work to lower the cost of those drugs for our health plans and their members through our negotiations. So we essentially are trying to soften the hit of that, those increasing prices that are set by the manufacturers by, through rebates and things like that to drive a lower net cost so that the list price is not what's borne by the consumer. That's where I think that is one thing I really want to, make clear. And I think it's something that we need to keep in mind as we have any discussions around PBMs and how we're paying for prescription drugs, is that the price, again, is set by drug manufacturers. That's not something we can control. That's something that they have a patent on it. They have that control. It's totally within their purview. And the only thing we can do is use our negotiating power and a number of other downstream strategies to negotiate a lower net cost and manage that for our health plans and their members. Now, in the generic drug space, a single drug is manufactured by multiple companies. So let's say, so it's basically a marketplace for that one drug unto itself. So if you have when a drug goes generic and you have, let's say, 10 manufacturers of that drug or 10 sellers of that drug, pharmacies can choose or contract with those to buy that drug from a specific wholesaler. And those prices are going to be different based on the manufacturing efficiencies or buying power of each of those entities selling to those pharmacies. But what we're doing through those where they can buy from those 10 different sellers of the drugs, we're asking them to buy at the best possible price. And so we use different strategies to kind of drive them towards, being good buyers of their products. And that's where in the generic space, again, it really comes down to their purchasing contracts and making sure that we're, again, driving the best possible value here to make sure that the healthcare dollars are being spent or we're getting the most out of our healthcare dollars, our plans' healthcare dollars from their members' premiums. So the next slide. And here, this is kind of, again, just another overview of what brand drugs are and generic drugs. And I've kind of touched on this, but I think it's just something as a good leave behind, a good reference point for, if you're trying to, drugs get thrown around as far as drug pricing. And obviously there are the market for brand drugs and the market for generic drugs operate a bit differently. And there are different strategies in each of those. But at the end of the day, we use different strategies to drive a lower net cost and, again, hold that healthcare spend down. Because, again, end of the day, we're the only entity in the supply chain that can really apply that downward pressure on the cost to members. And that really has an incentive to do so. If a manufacturer sells their drugs for a higher price, they make more money. If a pharmacy sells drugs for a higher price, they're going to make more money. Each of those entities in the supply chain, except for us, has an incentive to sell things for a higher price. And so we use, again, a number of strategies to drive down that price and hold it down to make sure that our health plans and their members are getting the most out of their healthcare dollars. So that's kind of an overview of the way in which we contract and kind of the different drug markets that we work in, the brand drugs and generic drugs, and then the different relationships there between us, manufacturers, PSAOs, and pharmacies. But before before we move on, the one thing I wanted to note is that what we're probably going to hear in a little bit is that we're here today, or that this discussion is necessary today because of a recent Supreme Court case, Rutledge versus Pcma. And I just want to touch on that case real quickly before, again, moving on, just to note that that case, what the court held there essentially is that the state had the state there being Arkansas, had the authority to pass a law that mandated reimbursement at or above a certain price to pharmacies. So PBMs had to pay pharmacies at or above their acquisition cost. The Supreme Court did not opine on the policy of enacting that law. They simply said that ERISA does not prohibit it. Not that they should. So if you hear that this is what Kansas should be doing, that's because Rutledge says this, that's not the case. What Rutledge said was that the state can do this, and in fact acknowledge that even if that law is going to increase costs for health plans and their members, the state is fully within their power to do so under ERISA, that ERISA would not prohibit that. So I just want to be clear about what we're talking about with that case as that comes up today. Because again, I think it can be misconstrued as something that's much broader in its application, where again, it just simply says, or that it compels the state to do something, where in fact it just says the state can do something in this area very specific to that rate setting and paying pharmacies more on that. So with
Thank you for mentioning the case. And you may have just been wrapping up, but if you've got like 30 seconds, I want to provide 4 minutes to the next conferee, if that is possible.
Yep, I was finishing up. Thank you for your time.
Great, thank you, and I'll look forward to engaging in questions, and thank you for all of the information. Next, we will have Jay Weaver with Blue Cross Blue Shield of Kansas. Welcome to committee. And we are a little short on time, so if you can hit the highlights, and if we're lucky enough that a couple of points have been mentioned, that would be good. I'd like to have our next conferee up at a quarter after, but I'll give you 1 or 2 minutes grace past that. Thank you.
Oh, wonderful. Well, thank you for having me today, and thank you for letting us talk. I'll make it real brief. A lot of the folks that are much more polished at this, and I think are in front of folks like you for a living, have probably said most of the technical stuff that needs to be said. My job is pretty simple, but not easy, and that's really to make healthcare more affordable for our members. Blue Cross Blue Shield is a not-for-profit health plan, and therefore we are really built around holding down premiums for our members. I'll just say that as part of that mission, it is nearly impossible for us to fulfill that when it comes to our drug prices without some scale and market power to help negotiate with manufacturers and pharmacies and others in that as a local Blues plan. We help to assemble the buying power of very small employers that rely on us to help them, as well as individuals that buy our benefits. And then we go and shop that to purchase PBM services that have really negotiated those kinds of scalable discounts around the industry. Every few years, we select a PBM and we use them to help provide those discounts, as well as perform certain services. Most of the services have already been talked about today, but provide those services at scale where it's a lot less expensive to, do a lot of one thing rather than us to have to hire somebody to do not even a full person's worth of work in some of those spaces. So with that, I mean, this is a necessary tool for us to be successful serving our local markets. Many times it's the local providers that are our customers. We insure as a health insurer customers that are pharmacies and hospitals and provider groups, provider practices. So we try to bring that all into the fold as we decide how to select benefit plans and vendors that will help serve those needs. And so it's really a partnership in that. With that, I'll actually cede the floor. Thank you.
Thank you, and you were really quick, so thanks for getting us back on schedule. That might allow us 1 minute if there's a question for this team so far, and otherwise we'll move on, and we are planning on questions at the end. Anything you wanted to direct to any of our conferees so far? Representative Neighbor.
Thank you, Mr. Chair, and I think this question hopefully gives a little bit more background on what we're talking about too. So the question can be answered by all of you, but when did PBM start owning pharmacies within the network? Can anybody answer that?
I don't have a date. Is somebody taking that question? If not, I'll just say that some years back, maybe in the last 5 years or so, there was a major merger in the market where Caremark, who was a PBM, merged with CVS Health or CVS Healthcare, which is a pharmacy group, and that was one of the big major mergers. Prior to that, I think Rite Aid built a PBM, and it's kind of the history of those kinds of alignments. But beyond that, I can't quote dates for you.
Thank you.
Yeah, I apologize. This is Melody Schrader with the trade. I don't have a date. Otherwise, I would be happy to answer your question, but I don't have a date. I do know that all of those mergers and acquisitions have to go through a thorough process with the Federal Trade Commission, and the Federal Trade Commission has weighed in on each and every one of those acquisitions.
Yeah, I'll just add, this is Marissa Schlafer from OptumRx, and we do own Genoa Pharmacies, which are community pharmacies based in community mental health clinics, and we bought those, OptumRx purchased those pharmacies in 2018.
All right, so this is not, 2018 would be fairly new, but I think these have been around a little bit longer than that. If somebody could just kind of research that, I'd appreciate it. I think it would give a baseline for us to work from. Thank you, Mr. Chair.
Thank you. Committee, continue to think of your questions and jot those down. We'll try and save 15 minutes at the end for that, but I would like to turn the floor over to Matt Morrison as our next conferee. Welcome to committee.
Try to share it. See if I can maximize this. There we go. Perfect. Okay. My name is Matt Morrison. I am the immediate past president of the Kansas Pharmacists Association. I'm a second-generation pharmacist. Yeah, I believe so. It's blue. Oh, yeah, sorry, I can do that. I'm just so used to having it on all day. I'm a second-generation pharmacist, University of Kansas grad, 2009. I'm the owner of Gibson's Pharmacy in Dodge City. We have 28 employees. It's a family-owned business. We celebrated 40 years. My dad owned it before me. We celebrated 40 years last week. So my wife and I, who's also a pharmacist, purchased the store in 2015. I'm also the founding member and the acting chief executive officer of a transparent PBM called Oriat RX. Oriat RX was founded by 4 independent pharmacy owners here in the state of Kansas. It's a new offering. And really, the reason that we established it is because we were really frustrated with the marketplace and what we have seen occur in the PBM industry over the past 15 to 20 years. So I bring a little bit of a unique perspective that I can come from kind of all different backgrounds here. I do have about 3 years of experience in the PBM market. We've been working very hard to get that up and running and operational. So I've got about 3 years I've been operating Oriat RX as well. So today, really what I want to do today is just run through how the system works. You know, everybody wants to talk about lowering costs, or we do this to lower costs, or they do this to raise costs. But really today, I think the focus needs to be on just what are the relationships, what do they look like? And so we've developed a chart to kind of help with that, because I'm a very, very visual person. I think this is helpful. And we're just gonna kind of work and add layers onto the cake of, you know, what a PBM is, why they were established, what they do, and then we're obviously going to discuss some of the flaws that we witness in the PBM industry as well. And then a little bit of discussion on how we think we can fix it. So the first slide here is just a basic, this is how pharmacy was practiced until about the mid-1980s. And at this point, it was very simple. Manufacturer made the drug, manufacturer sold the drug to pharmacy, pharmacy filled a prescription and sold the drug to the consumer at a cash price, effectively. Very little of this happens now. Very less than probably 7 to 8% of the marketplaces actually just functions like this now. So at that point in 1980, when PBM started to get more prevalent, when this was the way that pharmacy was practiced, the average per capita spend annually was $134, okay? And we'll talk about what that is expanded into now. So the next thing that happened, and kind of in the progression of things, is the employers started saying, hey, we're providing health insurance, we're providing health care benefit, why don't we provide prescription benefit too? And some of the early adopters actually came in and they decided, hey, we'll just, if somebody submits a receipt to us, if we have an employee that goes and gets a prescription at the store and they bring us a receipt, we'll pay them half, or we'll pay them all of it, we'll pay all of it, and we'll just cut them a check. Well, as prescription volume rose and things got more complex, that got tedious. And so that resulted in the formation of an intermediary that we would call a PBM. And so PBMs recognized that there was a revolution of data and the revolution of the way we exchange data with the internet and all of that. So recognizing that, they stepped in and they said, okay, employer, we know you want to provide a benefit to your employee. So what we'll do is we'll accept claims or reject claims. We'll provide a service at the point of sale on pharmacy, and we will pay them for the claim. We will set the amount they get paid. We'll pay them for the claim that we're due minus the copay that's due by the patient. And they set the copay for the patient as well. And on top of that, we'll just charge you an administrative fee to go ahead and do that service for you, and then we'll charge you for the payments that we had to pass on to the pharmacy. Everybody's following at this point. I think everybody would agree this has value, right? The employer doesn't have to deal with it. A PBM brings value at this point. So then we kind of progressed into after the early adopters took this on and hired PBMs direct, we started to build the PBM industry into a health, or pharmacy benefits into the health benefit. So accumulators, deductibles, all that stuff were being accumulated, including pharmacy spend and medical spend. And so really nothing changed here other than a lot of these payments were being passed through a third-party administrator or a health plan rather than just directly from the employer to the PBM and then to the pharmacy. So this right here is a sustainable system. As long as this is managed properly, this is a sustainable system. The problem is the wheels started to come off pretty quickly. And so what we saw, one of the next things that happened, or along the way something that happened, is we started to get into a system where a rebates type system. And the rebate system's seen a lot of scrutiny on the national level over the last 12 to 24 months. But what a lot of people don't realize, or what actually happens, is a drug manufacturer pays rebate to the PBM. We can call it a kickback. If you wanted to get nasty about it, you could call it a bribe to get their drug put on formulary. So you might have two drugs that are very similar, competing for market share. And to get on a drug formulary, they're going to be required to give more rebate to the PBM than their competitor. And initially, these numbers were low. Brand name drug costs were low 25, 30 years ago. And so originally, these drug rebates were low. And it wasn't really a problem. But we'll talk about what happened in the marketplace and some of the incentives the PBMs had to really crank up drug prices to collect more rebate here in a second. So the last thing, and we're going to skim through this one very quickly, and this is just added on. It's just below the just between the pharmacy and the pharmacy benefit manager. Probably about 10 years ago, the pharmacy benefit managers decided another way they could kind of produce some income was they could take a clawback after the claim was submitted to the pharmacy. They could take a clawback later back from the pharmacy. And so a DIR fee is more of a Medicare term, but effectively what happens after the claim is submitted, in some cases they would actually raise the copay for the patient so they could collect a larger DIR fee on the backside as well. The state of Kansas quasi-outlawed this several years ago in a bill, so we don't need to talk about this much today. DIR is actually related more to Medicare, so we're not going to have much Medicare jurisdiction in this room here. So, you know, this is really PBM in a nutshell at this point. This is what the PBM system looks like. But what I really want to do is I want to kind of demonstrate how this system has been used for financial gain, okay, particularly by PBM. So the first thing I'm going to demonstrate is price spread. So there's some subtle changes. I just went to the next slide, and you'll notice a subtle change. You'll notice that the employer's payment to the PBM got bigger, bolder, and thicker. It's a bit larger payment. And you'll notice that the payment to the pharmacy got thinner and more frail. So the definition of price spread is when a PBM charges an employer or a health plan more than they pass on to the pharmacy. And we've seen it be arbitrary numbers. We've seen it be numbers that you can kind of make sense of, that changes day to day. Pharmacy payments change day to day. We use MAC pricing, maximum allowable cost for generic claims. We might see a $2 and $10 generic in the morning and a $15 generic in the afternoon. It's the same drug and same quantity. And so, so the definition of price spread is effectively that we have the payment from the plan is less than the payment to the pharmacy, and the PBM keeps the spread. As the CEO of Oriat Rx, what we've seen, we talked about buy and sell earlier. We see that there's effectively a sell side for PBM and there's a buy side for PBM. So their sell side is they're selling to an employer at a certain rate. Say it's a reference-based price of $100 and they get an 80% discount off of that. Okay, so the total cost of the drug would be $20. But they also have a sell side where, or a sell side, or no, this would be a buy side for the PBM. So the PBM would actually buy that drug at the reference-based price of, say, $100, and they would take a 92% discount off that, which would be an $8 payment and a $12 spread. Those are arbitrary numbers. Again, those aren't numbers that reflect anything, but that just demonstrates that the PBM is selling at a certain level and then buying at another lower level and keeping the difference. So that's what we would call price spread. So again, advance to the next slide here, and we've seen now that the drug rebate or kickback line has now gotten bold and big. And this is probably the largest concern, especially for Kansas pharmacists. As a pharmacy owner, as a pharmacist, this is one of the biggest concerns. So a recent study by USC Schaefer found that $1 of every $1.17 in price increases on drugs was attributed directly to increased rebate. And so the other thing I'll mention is sometimes rebates get passed to the PBM and then they get passed on to the employer, the health plan, or whoever's paying the bill. But in a lot of cases, none, little, or some of it gets passed on. Hardly ever does all of it get passed on. And so what you end up with is a scenario where the PBM actually has an incentive to raise the price of those brand name drugs to collect a greater rebate on the backside. Eli Lilly came out and talked about their insulin several years ago and has demonstrated exactly that. What they said was in 2014 that the net price of insulin was $200 and their net price after rebate was $104 or $108. And then 5 years later, the net price of insulin went from $200 to $400, but their net price after all rebates was actually $4 lower for that same amount of insulin. And so, again, demonstrating that there is incentive for PBM to raise rebates by raising drug prices. So major concern there as well. One other thing we see regarding this as well, we've seen PBMs deny claims at the pharmacy level. They'll deny claims at the pharmacy level for a low-price generic, force the utilization of a high-priced brand name drug, and we can only really speculate that they're receiving rebate on that. Well, they are receiving rebate on that brand name drug. Again, instead of utilizing low-priced generic, they're using high-cost brand name drug for that rebate potential. So we have seen that as well. So one last slide here, and this kind of depicts two things. The first one is patient steering, and this is really frustrating to see this in the marketplace as well. But we talked about, and I can answer, Representative Neighbor, I can answer your question. The second PBM ever developed in the mid-'80s was called Pharmacare, I believe. They were established by CVS Pharmacy. They then, I think in 2007, changed their name to CVS Caremark. But from what I understand, they were always a part of CVS. So that's been going on a long time. The practice of owning a PBM owning or affiliating with its own pharmacy is not new. It's been going on since the mid-'80s. It's gotten more prevalent though, and specialty med especially. They own their own specialty clinics and pharmacies, because specialty med are high dollars. Sometimes we can see them $10,000, $20,000, $30,000 a month. And they also have a high margin potential too. A pharmacy could make $1,000 on a $30,000 claim, so they realize they want to filter those drugs into their own specialty pharmacy. I would argue, this is my independent pharmacy owner speaking right now, I would argue that we can provide better care at home to our members, our patients that we see every single day than anybody at a mail order pharmacy or a specialty pharmacy can. This is what we're built for. We have relationships with our patients so we can do that. So then the other thing so what happens here is the PBM owns the pharmacy, and we've seen examples where the PBM actually pays their pharmacy better than it pays its competitor, than its non-affiliate competitors in the community setting. So that's pretty prevalent. The other thing that this depicts is the what we would call full vertical integration of PBM, health plan, and pharmacy. So 80% of the PBM market is controlled by 3 players. They're all Fortune 500 top 25 players. They either own or are owned by a health plan, and they all own either mail order, specialty, or retail pharmacies. And some of them own all 3, mail order, specialty, and retail. So that makes it, that's a conflict of interest, first of all, because again, we have the potential of paying our affiliated pharmacy more than a non-affiliated pharmacy. So again, what we have here, what this has grown into is effectively our modern day pharmacy marketplace. And today, from $134 in 1980 per capita on average, we've now inflated to over $1,300 on average per capita annually. And so, our concern is this system is rampant with misaligned incentives, it's rampant with conflict of interest, vertical integration, and concentration of power and anti-competitive business. And so what we think needs to be done is that we need oversight. We need somebody to oversee this. We need effectively to turn the flashlight on and see where this money is going, because if we don't know where our healthcare dollar is going, then we can't decide how to effectively spend our healthcare dollar. And then some protection for pharmacy is nice too. This isn't what this is all about today, but community pharmacies like mine, we're not asking to get paid an exponential amount more for a prescription just because one of the PBM's pharmacies get paid way more. We're asking that they have to accept the same financial terms that we do. And if they can't, then we need to start asking why. And maybe that's not fair to the providers that aren't affiliated with them. So in closing, I appreciate the time and I appreciate your attention. These are complex issues. I know this is a lot going on. It's a very short amount of time to put it in front of you, but if there are any questions, I'm absolutely happy to answer.
So thank you, and thanks. You got us on schedule, so that is well. Representative Proctor.
Thank you, Mr. Chairman. I'm one of the new legislators here that desperately needed this briefing today. I've got a question. So what's not presented on this slide, which is obviously part of the system, is the doctors that do the prescriptions. How is this kind of growing monster affecting the decisions that doctors are making and what they're prescribing?
So that's kind of a double-edged sword. So a lot of physicians will tell you they don't like the PBM industry because they run into issues with non-covered meds, formulary issues, that it used to be less of a problem because drugs were more affordable. Now, when you have an insulin jump and double in price over a 5 to 8 year period, all of a sudden you have to have that discussion, Novolog or Humalog, when effectively they're the same thing. They get frustrated by the process. They're not involved at all with PBM, but what happens is, and PBMs can serve a purpose when it comes to formulary and not covering drugs that shouldn't, like bad drugs. There are bad drugs out there. There are drugs that are expensive that shouldn't be covered. And so they serve a purpose when it comes to that. But I think there's a lot of frustration with the physicians. They'll send somebody into the pharmacy with a prescription, and then all of a sudden it's not covered. The member can't get access to it. And then they're fumbling to figure out what's covered. Some PBMs have good resources for that, some don't. They're trying to figure out what's covered and how they can get something in the patient's hands to get them treated. So most would tell you, last year when we had a bill come up and we had a physician write a written testimony that's really good. He's here up in the Kansas City area and he's an endocrinologist. So they're not fond of them, but it is kind of a push and pull relationship.
Did you have a further? Okay. Representative Neighbor.
Representative Proctor, I'm just going to backfill that just a little bit if that's okay with you. Years ago, when you went into your physician, they wrote out a script and you took it with you to the pharmacy. Today, when you go in, oftentimes they have a computer sitting in front of them with all of your information, and they load in there your insurance. And from your insurance, it tells them whether they have to go like a 3-month prescription or a 30-day prescription, and it sends those out automatically. When it gets to a pharmacy, there are times when that pharmacy might say, we don't carry that, it's not on our generic or list. I'm sorry, my mind just went blank. But in our formulary. So therefore, you end up having to go back, you call the doctor and say they won't cover it, what else can I have? Or if you get it, you're going to pay top price. Would you say that is correct?
Yeah. And this is kind of a side note, but and they claim that there's firewalls in between that they can, but a lot of times we'll hear stories. We've actually seen examples where a physician gets member goes to local pharmacy, they get something filled. Next month, the pharmacy goes to fill it and it says it's refilled too soon. It's already been filled at a mail order. And unbeknownst to the member, unbeknownst to the patient, and unbeknownst to the pharmacy, the PBM took the data that was filled at the local pharmacy, that was passed on to their affiliate PBM, and then they send a refill request to the doctor signs it, and the next thing you know, it's come through the mail. And a lot of times the member had no input into this situation at all. I mean, there's stories rampant about that kind of thing happening. So that's terrifying as well. It's not free market, at least.
Thank you. A couple of online questions, starting with Representative Finney.
I'm not sure who can answer this question, but I was wondering, do insurance companies or employers have access to all their pharmacy claims data?
That depends on the situation. So generally, an employer that is self-funded, fully self-funded, or partially self-funded, or level funded would have a certain amount of access to those claims. If you're a fully funded insured or insurer, you might get a summary report about highest spend, but very little of that information will actually they don't readily provide that information. And if there's some speculation that somebody's price shopping, then a lot of times they'll make it even more difficult as well.
Also, I was wondering, I mean, why did the drugs rebate start? I mean, that part has always puzzled me. I'm just curious about that. Who can answer that question? That's my last question.
Sorry, what was that?
We didn't quite understand the question. Would you repeat it,
Oh,
Representative?
why did drug rebates start?
You know, I would assume in the late 80s when PBM got more prevalent, maybe early 90s when things were getting more prevalent. It's probably been around even longer than that. But again, we've seen, the most disturbing thing we've seen is we see like clockwork 5 to 10% increases on single source drug costs every single year. And the manufacturers do have final say on that drug. They're the ones who set the drug price. And pharma's, in my opinion, pharma is complicit in that. They've raised drug prices. They've continued to raise drug prices. But pharma will also tell you that it is because due to pressures for increasing drug costs for rebate potential. They're raising the net price of the drug because they're being pressured by the PBM industry to pay more in rebate. They've openly said that. So
They might have. Sorry, Melody, were you going to jump in? Or I mean, I think that the point about pharma like catering to the price increase or that we are driving that, I think, is ignores the point that, again, we don't have control over that price. That ultimately manufacturers have control over what that price is and them alone. And as far as rebates, that was a creation by pharma, again, to be able to get their products onto formulary. So that's something where they wanted to drive, their products to be the preferred ones. So it's not like something that's been imposed upon pharma by PBMs. That's just not the way that system was created.
Mr. Chairman, if I might, on rebates, rebates are part of a lawsuit actually that was brought by pharmacies because they couldn't get access to the same discounts, and they were challenged it in court. And as a result, because rebates are seen as a look back, in other words, they are used to drive market share. That's what the court said they had to do. So they're not a discount. They are used to drive market share. That's how they are used. Formulary placement is used to drive market share. That's what rebates do. They are not a discount. And therefore, that's what they're used for. It is a result of an actual court case. They're required by that court case. So I appreciate the gentleman's response, but that's not an accurate response.
Regardless, PBMs are collecting rebate and they're retaining them in the billions. I mean, tens and hundreds of billions.
So to that point,
Again,
to Ms. Strader, do the rebates go to the PBM? Do they go to the pharmacy? Do they go to both?
So there are a lot of different kinds of rebates. There are rebates that are used from the wholesaler to the pharmacy, but that's not the kind of rebates the gentleman is referring to. The rebates that we're talking about here between the drug manufacturer for formulary placement, again, used to drive market share, those rebates are negotiated in the contract. Our sole purpose is to drive the lowest net cost for our client. And when I go back to that chart, everything is negotiated in that contract with that sophisticated client. So that client asks us to drive the lowest net cost. So the client can decide how he wants to use those rebates. He can use them to lower premiums, which again benefits the entire risk pool, which is oftentimes how those rebates are used. And he will decide to take 100% of those rebates and lower the premiums for the entire risk pool. He may decide that instead of paying a fee to the PBM to perform the services, which I outlined earlier, that he will allow the PBM to keep a portion of those rebates, usually a small portion. They will take the rest of those rebates to lower the cost to the overall plan, and then they will pay a fee. But all of those, remember, these are sophisticated entities, are negotiated down to the most minuscule part of that contract. and are agreed to up front. None of that is done on an ad hoc basis, and none of it is done at will. All of it is done up front with two sophisticated entities who have nothing else to accept. The only motivation is to have the lowest net cost to each party.
Thank you. I think we've hit an issue that is creating more questions, and we'll want to get deeper in those from several of you that weighed in. So thanks for that information. I will go to the next question, and that would come from Representative Bishop.
Thank you, Mr. Chairman. And I do have a couple of questions. If you can have patience, I'll try to get to them quickly. I see that a lot of the crux of the matter is the control of the formulary by the pharmacy benefit managers. And is it true that the rebate is from the drug manufacturer to the PBM is negotiated as a percentage of the manufacturer's list price? And if that is true, then how would it not tend to drive up prices and increase the higher out-of-pocket costs for patients?
So thank you for the question. And I will tell you that I have some other experts, including a pharmacist on this call, so I'll be happy to have her weigh in as well. But remember, our goal is to get to the lowest net cost. We would be happy for the pharmaceutical manufacturer to lower the cost. We do not care if they do it by rebates for formulary placement or they do it with lower cost. Our goal is simply to get to the lowest net cost for our client. So they do it with rebates, that's fine. If they do it with lowering the cost, that's fine with us as well. That's a simple answer for the question, and I'll be happy to ask anyone on the panel if they've got additional information or can add additional value. Marissa, is there anything you'd like to add?
Yeah, thank you, Melody.
Hang on. One at a time, and the chair will try and keep control as we go through here.
Thank you, Mr. Chair. I apologize.
So for just a moment, I'll come right back. Was it Marissa that had something to add?
I can, yes.
Okay, I'll give you a moment or two, and then we'll give Matt a chance to respond as well, and thank you.
Well, I think just to expand on what Melody was saying, and no one wants to admit their age, but I was filling prescriptions and working in a community pharmacy in the 80s and 90s when $39.99 was a very expensive drug, and now we're seeing things in the hundreds of dollars. For an example of why rebates exist, there's drugs like Nexium and Prilosec that work exactly the same way, or basically do exactly the same thing. We could put both on formulary, or we can go to the manufacturers and say, these drugs are very high priced. Which one of you can outbid, which one can give a best price, because we have two drugs that are identical. In classes where we have 5 drugs where one is better than the rest, that one that's better than the rest is going to go on formulary. The other ones, we make them compete on price. And we do take those prices and use them to lower the cost, both for our clients and for so many of our members that have percent copays. That helps lower the costs that we're seeing. That helps us keep the copays low, whether a $10 copay rather than having to raise copays each year. So our collecting rebates, those go back to our clients, and for each of us, we handle them in different ways. For OptumRx, I can tell you that 98% of the rebates do go back to our clients.
Thank you. Matt, on this one, and maybe even the previous question, if you had.
Yeah, in relation to rebates, so Pharma will tell you that a rebate is, and I believe PBMs probably will too, that rebate numbers are proprietary. They don't release that because it puts them at a competitive disadvantage too. So I would urge caution. I mean, it's a really gray space because nobody knows outside of those two entities nobody knows who is collecting. So I can't speak to individual PBMs on what they keep in rebate, but I think, something we've actually seen in the marketplace is there's some manipulation in that as well, where they say we give 98% of available rebates back to the plan. I'm just quoting Optum's claim there, but we give 90% of the rebate back, but then there's some kind of a percentage-based fee for acquiring that rebate, aggregating that rebate and putting it together. So there's a lot of ways to manipulate there. It's just, I think the answer is it's a really gray space. It's a dark place.
Okay, and if we can try and.
Mr. Chairman, I have a follow-up if I might.
Absolutely, Representative Bishop. Your question will be next. If we can try and keep the comments non-judgmental as well, that would be great. Representative Bishop, for your next question.
Thank you. I would like to ask now about transparency and how transparent that the process of the formulary is, and whether or not the payers, whether they're employer groups or insurance companies, have access to their own claims data.
Representative Bishop, is there someone in particular to which you would like to address the question?
I would address it to Matt to start with, and you can control if anybody else wants to chime in.
Thank you.
Thank you.
So a PBM might have several formulary offerings. Generally speaking, they're going to be mainly based upon, generally lowering costs. In theory, again, the issue isn't necessarily lower net cost, but it's how much of the rebate is being on single source drugs, how much of that rebate and specialty too, how much of that rebate's being passed through to the plan. I think it's going to depend on the PBM on which formulary they push to a certain plan or another. Does that give some clarification on that?
To a great extent. What I find is that if you have a patient who has maybe a number of high blood pressure, diabetes, type 2, and so forth, every single time the insurance plan renews, a conversation has to ensue between the patient and the doctor trying to re-establish what their regular medication is going to be and how much of that is now going to be out of pocket.
And I think that speaks volume to where we've come from a cost standpoint. This wouldn't, those conversations wouldn't be so prevalent if drug costs in general were low. If my dad were standing here, he would tell you in the late 70s and the early 80s, a patient would come in and 99.9% of the time they'd pay cash for it, they'd walk out satisfied and everything was going on. And so I think what's driven a lot of this, and it ties back to all of these things that we can attribute to higher drug overall costs. It's not just about copay, because actually the marketplace can be manipulated by low copays when the net cost of the drug is still high. It gets back to this: what's the overall net cost of something, and what's the impact it's going to have on the system? I think that's what's driving this conversation, that type of conversation about what the physician can do pretty heavily.
Thank you. I might follow up just a little bit, and I don't know, perhaps Marissa or Melody might be our best one. You had mentioned that all of these things are negotiated, and it's clear going in for the rebates, et cetera, if I heard right. And in that negotiation, then who all would know it? Would it be so which parties would know it and which parties would feel like they're not knowing what that is in that process? Does the provider and the plan know anything about it, or is it between the PBM and the drug manufacturer?
This is Morrison. I can take that one, at least on behalf of OptumRx. So when our industry relations team negotiates with the pharmaceutical manufacturers, that is information on the amounts of rebates is shared with our clients, whether that be a health plan client or an employer client, generally on the amount they want. We can negotiate. We have our account managers that meet with our clients. Some of the clients want very detailed information. Other clients really just want us to take care of it. So I definitely won't say every client sees every piece of information. Some prefer just to see things in aggregate. But I think we do share that information with the clients, and follow up to the transparency question. OptumRx has an open P&T, I shouldn't say completely open, it's open to our clients. Any of our clients are able to attend our pharmacy and therapeutics meetings. Those are held in Chicago 4 times a year, and we do have them in a setting where clients can attend. We also, in follow-up to the question about whether clients can see information with a list of all the claims and the detailed claims. With health plans, we do share that information with them. With an employer group, they don't get a flat file with all of the detail on every member. You wouldn't want us sharing information with employers on which of their patients were on diabetes meds, which of their patients were on HIV medications. That's information that needs to be protected. But we do give them aggregate reports, and we go through those reports and help them identify the detail about the utilization for their members.
Thank you. We have 3 questions remaining, and I hope everyone might have patience to go a few minutes past 5, but I'd like to go next to Representative Riley.
Thank you, Mr. Chair. This might be a question for Melissa or David. What year did the Kansas Insurance Commission start allowing pharmaceutical expenses to be covered under the healthcare program? Rather, it used to be that healthcare was doctors, hospitals, that was it. So at what point did that get expanded legally in the Kansas Insurance Commission that pharmaceutical things are covered? So that's my question. And maybe while you're working on it, I had 2 things of process to look at that I keep hearing. Again, we heard much of this discussion a couple years ago again. But, if I am in the grocery store business and I have hundreds of labels that are selling their products to me or trying to sell their food products out onto the market, and they're trying to get it into the food business so it'll get to the consumer, there is negotiation that goes in behind that the consumer doesn't need to know. Sometimes it's not even the grocery store owner itself that needs to know. It's done by Kroger, done by Walmart, someone of who gets the most amount of shelf space. Where do I get my shelf space? Is it in a freezer market? Is it over here? So some of this negotiation kind of stuff does not need to be completely transparent. That's part of competition. The other point of, and I'm stalling just a minute here, just in case David or Melissa came up to answer my original question, but the other thought process is, if I have car insurance, and in car insurance, that between the consumer and the insurance company, and the car insurance company starts working out a deal when I have an accident, and that accident is to repair my car because it got semi-totaled out, it got a fender smashed up on it. And if that insurance company says, no, there are 3 companies in Wichita that you can go to, only these 3, even though there is probably 150 independent people that would like my business, no, you can only go to these 3, that tells me that that's not good competition. The last part of that part is what if that insurance company goes to those 3 and says, we will give you 80% of our business if you will give us a kickback? That's not competition, and I think the insurance commissioner would like to hear about that. The other piece is that if the insurance company would go out to the parts manufacturers and start making deals with the parts manufacturers that sell parts to the body shops and say, okay, you can only sell, these parts can only be sold to these 3 companies. You cannot sell to those 150 independent people. So there's some points here difference between the way car insurance is handled, health insurance is handled. And David, do you have an answer for me on the insurance? Thank you.
And to David or Melissa, if you have a few thoughts to share, that is great. If you have more detail to follow up with later, you guide us as is appropriate.
I can say that claims have been billed to PBMs since the early 80s. I began practice in 1987 and we were doing it then. I'm not sure that I fully, if that's not the answer to the question, then I don't fully understand it.
And if I got, you are directing it to staff, is that right, Representative? So if David or Melissa have anything great.
Oh, sorry.
No problem. I should have taken
when your name Marissa, you answer to Melissa.
But again, if you wish to follow up later, just inform us of that.
Yeah, Mr. Chairman, yes, I think that's probably true regarding when prescription drugs were covered. To Representative Riley's question, the State Employee Health Care Commission has been contracting with what was Caremark PCS Health or Caremark to provide pharmacy benefit management services since 2006, which is actually times pretty well with the registration of pharmacy benefit managers in Kansas. That also was a result of a 2006 law. So that might give a little bit of the context to using PBM to assist in the control of pricing, drug pricing for the state of Kansas.
Thank you. And we may follow up later with that. Our next question will go online to Representative Howe.
Thank you, Chairman Johnson. A very informative hearing. I'm learning a lot. I appreciate it. My question is to the representative from Gibson Pharmacy in Dodge City. From your experience, have you personally experienced clawbacks in the sense of, I guess, deductions to your reimbursements? And if so, could you speak a little bit about those experiences?
So you're referring to like a post-claim clawback, correct?
Correct. I didn't know if that was a problem for you or others here in Kansas.
Yeah, so since the law was passed here in Kansas, we see less of it now. I don't believe that law applies to ERISA-based plans. So an ERISA-based plan could actually still charge us a clawback legally in the state of Kansas. Should be, speaking of ERISA, that's something we should be reviewed at some point. But daily, I would say daily. And the most concerning thing about it is we would see, for instance, a $25 prescription set, a copay would be set at $50 so they could charge a $25 clawback on the backside. Now, granted, we don't see nearly as much of that now, but 3-4 years ago, we were seeing it on a daily basis. And, you know, and the claim will be that they were using that to fund the plan and that was part of the contractual agreement, but effectively you're charging the patient to fund, non-transparently charging the patient to fund the plan at the pharmacy point of sale. And there's, I mean, and at that point, we were gagged to even talk to the member about it. Now we're allowed to talk to them. So if we see that occur, we'll sell them the prescription for $25 and save them the $25 and not, you know, we're allowed to do that now. So I hope that answers your question.
Yes, thank you. And also one last question. How many independent pharmacies are in Kansas currently?
340, give or take. We lost, we had a pharmacy 4 blocks down from us that closed its doors in December. They had been there 25 plus years. So they're now gone. They would tell you that pricing pressures are the main driver of that.
Thank you. Thank you, Mr. Chairman.
Thank you, Representative. Our next question is from Representative Miller, if he still has it. and if you'd say to whom it's directed.
Thank you, Mr. Chairman. It's going to end up being directed at you. I do want to say I appreciate all the conferees today, particularly Mr. Morrison. I appreciate your testimony. Would you be able to stick around for the entire legislative session so that by the end of it I might understand this topic?
I would love to.
I'm starting to understand, Mr. Chairman, why 1 month my one drug goes from $100 to the next month $1,100, and I really want to dig my teeth into this. What's the plan?
And the plan for digging further into this one?
I anticipate this discussion is prefatory to some legislation we're going to have a hearing on.
There is legislation that has been proposed, and there is a bill in the committee. Today's plan was to just try and get our teeth into part of what was going on and recognize that in my own case, I don't understand the whole picture, but trying to get closer to that. So exactly what steps we take next will be up to us as the committee, and whether we think we can get our arms wrapped around this in weeks or if it will take months and an interim. We do have the benefit of some folks that have worked on this prior to some of us that are new to the issue, but it was to at least take a moment and have a discussion about what issues we wanted to delve further into. So your direction will help to determine that. Representative Neighbor.
Thank you, Mr. Chairman. I have 3 quick questions, and they're for our pharmacy. What 3 companies were the 3 original PBMs? You said CVS was one.
I don't know the names of the, PharmaCare was one of the first, and I believe that's the one that transitioned to CVS Caremark. All of them have been gobbled up. They don't exist in their original form. Because they've been, when one gets big, the bigger one eats them. And that's the way they handle competition in a lot of cases. And again, that's where we've gotten, I think, outside of high drug prices, I think one of the other big concerns is we've got this concentration of power. You know, one of your colleagues likened it to social media, and we don't have other options anymore. There are 66 PBMs in the market, but again, 3 of them control close to 90% of prescription claims, 80+% of prescription claims in the country. So.
Second question real quick is, what is the issue with 340B funds? Do you know about that?
Do you have 3 more hours? So that's a really complex issue. So PBMs do tie into that as well, but kind of in an unexpected way, maybe not so unexpected. So 340B was originally derived to give cheap drug stock sold to these rural health clinics that had trouble making ends meet. And so the arrangement would be the drug stock actually got sold to the clinic, but it would be shipped to the pharmacy. The clinic would pay a dispensing fee to the pharmacy, and then they would collect the rest of the claim to help fund the clinic. That's, in essence, how the 340B program works. Pharma does not like 340B. They don't like selling their drug stock. I mean, a box of insulin can be $1 rather than, you know, at a wholesaler, a box of insulin costs $250 or $300 retail. The clinic might pick it up for $1 and ship it to the pharmacy. So pharma doesn't like having to sell their $350 product at $1, first of all. And then second of all, the PBMs have now started to come in and modify contracts to say, we're going to reduce your reimbursement on any qualified 340B claim, because they realize the pharmacy's not paying anything for it. There's no cost to them. They're just getting a dispensing fee. But that results in the rural health clinics getting paid less. So if they reduce reimbursement by 25%, that's a 25% lower payment to the rural health clinic.
Did this decrease their ability to prescribe or to give out? These are federally qualified health clinics that we're talking about, so.
So to me, the big concern is financial viability of these clinics. I'm from Dodge City. There's an FQHC in
Pittsburgh?
Yeah, I mean, yeah, we all come from areas where we know there's one at, right? I think a lot of them, this was a good source of revenue. It was something that kept them open. You you know, it's very complex. We're talking in a lot of generalities here. There's probably scenarios where I don't want to say it's being I mean, everything can be misused at some point. So there probably needs to be discussion on what the proper balance is here. But when it comes to I know some of these rural clinics, like physician clinics, they're really relying on these programs to keep them open. And if they're not open, about the only thing, and a lot of these, about the only thing left in town's a pharmacy. And when that happens, there is, you know, it helps some of these rural pharmacies too, because these dispensing fees are usually better than reimbursement on the retail side too. So admittedly, it helps them as well.
Thank you. And my last comment, I'm done.
Okay.
The AG, Derek Schmidt, was part of a 20, I think, AG group that actually wrote letters to the Supreme Court discussing this issue when it was before them, saying that there was definitely a problem and agreed with what their decision was. So I would bring that in. Thank you.
Thank you. I'm not sure, was that related to the 340B or something
No,
separate?
that was related to
Okay,
the Supreme Court.
very good. So, thank you for those questions. I know there is a lot more to say. We did not, the 340B question's not a short one, and we had not intended to delve into that one, although I know there are a number of issues that we could get into there at some point in time. I want to say a huge thanks to all of our conferees. What I know is everyone who is here could say twice of what they said and still only scratch the surface. So I apologize for the frustration in only having some minutes to share some fraction and not have a chance to respond to everything that was before. And similarly, as we are learning to ask questions, we know that we have plenty more to learn on that side. We look forward to engaging with all of you going forward as we continue to explore the topic. And with that, thanks again to everyone, and we are adjourned.
Thank you, Chairman.